Welcome to the mini lecture for Unit 3, Governmental Operating Statement Accounts and Budgetary Accounting. So now we're starting to get into some of the meat of accounting, getting into the particular debits and credits, and beginning with what conceivably is if there is a real starting point to the financial management cycle for a government, it would be at the planning and budgetary stage. So this chapter is helping you to understand the accounting aspects of a government's budget, budgeting being very important to state and local governments, budgets often having legal standing for governments, being a legally binding document, in some cases having the force of law, and being the starting point, for establishing what the inflows and outflows for the next year are going to be, and then providing a structure, a set of benchmarks or targets against which actual inflow and outflow performance is going to be measured, and which the government is going to use to manage throughout the year in order to ensure that it arrives at the end of the year in balance with sufficient revenues to cover its costs. Among the things that you need to know, you want to understand inflows and outflows from the perspective of the government-wide financial statement, so understanding the difference between program revenues and general revenues. Program revenues being those that are generated by the actual activities or functions or programs or service provision of the government. General revenues being everything else, most notably being taxes. It's important to note that all taxes are general revenues, even if they're restricted to a particular purpose, because program revenues may or may not be restricted to a particular purpose, but they're generated by the provision of the service itself, whereas taxes are not. Taxes are charges imposed upon some other exchange transaction, like the earning of income or the purchase of something at a retail store, whereas program revenues are generated when the government provides higher education services in the form of tuition or fines that ticket revenue that come out of the police department. You should understand this concept of net expense and net revenue, how that works in the statement of activities, what that is intended to convey, which is, in general, the degree to which a government's programs and functions are self-sustaining. You wouldn't expect governmental activities like police and fire and sanitation to be self-sustaining. They are tax-supported, so you usually see a very large net expense in the net expense revenue section, but for business type activities like water and sewer, maybe a parking garage, you would expect those to be self-supporting because they are establishing prices, fees, in a way that is meant to recoup their costs. So generally you will see a positive number in net revenue in the net expense revenue section for PTAs, but not always. You also want to understand what extraordinary and special items are, the circumstances under which those types of inflows and outflows are reported, the manner in which they are reported in the financial statements, which is apart from the other inflows and outflows. And you want to understand be aware of some examples of each kind. In looking at inflows and outflows in the governmental funds, you understand that we're looking at flows of current financial resources and modified accrual basis of accounting, different from all the other financial statements, which all use accrual accounting and focus on the flows of economic resources, with the exception of the cash flow statement for the proprietary funds. You should understand the difference between revenues and expenditures on the one hand and other financing sources and other financing uses on the other. They're both inflows and outflows but other financing sources and uses are not revenues and expenditures, and you should understand what they are, know what the basic examples are for both other financing sources and other financing uses, the kinds of things that will appear in that section of the statement of revenues, expenditures, and changes in fund balance, as opposed to appearing with the revenues and expenditures. For budgetary accounting, you need to understand the credits and debits that are associated with establishing the budget and dealing with the budget through the course of the year, and then closing out the budgetary accounts at the end of the year. Be aware of the notion that estimated revenues equal appropriations plus budgetary fund balance. So that's the budget balance there. Either estimated revenues are going to be sufficient to cover appropriations, or you're going to need some budgetary fund balance to to close the gap. You need to understand the debits and credits that are associated with encumbrance accounting. For instance, when an encumbrance is put into place, you're going to debit encumbrances, and you're going to identify what year they're related to, because that's important. You're going to credit encumbrances outstanding, and again, identify the year. And then when you need to, when you actually get the good or service that was purchased that the encumbrance is related to, you're going to reverse that. You're going to debit encumbrances outstanding. You're going to credit encumbrances, and then you're also going to have a debit for expenditures and a credit for either cash, if you paid in cash, or for vouchers payable. In terms of revenue, you want to be able to identify whether a particular revenue is being shown by type or by source. Those are sometimes more or less the same thing, but there are some differences. You want to understand how property tax revenues are determined, meaning looking at assessed value of property, the property tax rate, the process of determining how large the property tax levy, that is, the assessed value times the tax rate, has to be in order to collect the amount of revenue that the government has budgeted for, meaning you need to allow for the fact that certain property tax accounts are going to be delinquent. You want to understand the nature of governmental grants and the debits and credits associated with that, as well as fees for service, licenses, permits, and fines. These are essentially like program revenues when you put the grants and the fees for services and other items together, and the accounting for investment income as well. And then on the expenditure side, as with the revenues, where you want to be able to tell whether they're being classified by type or by source or by some combination. For expenditures, you want to be able to distinguish when they're being classified by program or function or activity. So you're talking about police, fire, sanitation, or maybe even more detailed than that, traffic control or homicide or back office support. Something even more specific than the entire department or the entire activity. Also, expenditures when they're reported by character, expenditures when they're reported by object. So if you saw a list of of expenditure items, that you would be able to say, okay, that one is by program, that one's by object, and so on.